Welcome back to iHeart Crypto. So we got Bitcoin coming in below $20,000 at 19,250, and we're gonna see what's going on this week. It's a big week. Um, I have a feeling that we're gonna be faked out, but let's just go over see what the charts are saying. Some pretty bearish stuff is popping up, which is a little cause for concern. Let's just go over what's going on here. So let's go to the weekly chart. All right. So Heikin candles. All right. We are in a pretty nasty downtrend. All right. Let's just do this. Let's thicken up my candles here. Oops, sorry. Let's just thicken these up. I didn't realize that these were like this. That's not my fib. Come on, even my candles. Oi. All right. Let's just thicken these up a little bit here. Alright, there we go. So you can see the nasty downtrend. Alright, so first of all, let's just focus on where we're at in the trend. Alright, so on the weekly, here's a great example of where to get faked out. Alright, if you don't know, alright, Heikin candles show you a basic uptrend, okay? So Heikin candles on this huge bull run we had here, you got overshadows on the top, these little wicks, but on the bottom you can see you don't really have any shadows, alright, or any wicks, alright, signifying a significant uptrend on the weekly, alright? Same say on the downtrend, alright? So as you can see, this was a nasty downtrend. All right, this was when things were very clear cut. You know, these are. I mean, how many weekly Heikin candles did we get here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 red Heikin candles. Typical bear market followed by a month of up, a month of down, and a fake out. Right here. Alright. So one thing about the Heikin candles is when you see a Heikin candle want to reverse. Alright. This is a Heikin reversal candle. Right here. Alright. Long overshadow on the top, long wick on the bottom. Okay. Same can be said here. Alright. And the same could be said here. Alright. And of course, when things are starting to go a little sideways, you're going to get them popping up because they're, this was obviously a fake out to the upside, a little relief rally. And then long downtrend, no reversal candles, and finally we're starting to pop up with some reversal candles down here after a bit of a long time. But right here, let's see if we have any wicks to the upside. We don't have any wick to the upside. This is a nasty, Heikin candle after, 2 reversal candles, in my opinion. All right. Also, I mean, let's be real. Market cipher, 2 yellow X's. All right, on the weekly. That's not very good. Usually the first one can bring you down a little bit. Second one brings you down a little bit, and then the third and the fourth one signify seller exhaustion. All right, so the sellers are getting a little exhausted on a weekly time frame, which is a good sign that the bottom could be in. All right, but needless to say, they do tend to mark a little bit of downside. All right, looking at market cipher B here, you got a red dot, gonna confirm by the 26th. All right, last red dot confirmed here, right, with a yellow X. Right, you did come down. I mean, after you did confirm that, let's go to the regular candle. Let's see if it's there. Here's where your yellow X came in. All right, it confirmed with the red dot, and you got a little pump up. All right, just be weary of that. All right, you did get a little pump up. Now, is the same thing going to happen here? I don't know, because there is this downtrend of resistance right here. All right, this is major. All right, I'm sticking that up, and that's your main downtrend. All right, so pop back in a little bit closer. So is there room to pump up? I don't know. Let's see. You know, you get the highest that you can possibly go because you also have this descending triangle here. Okay. Where you got 1, 2, 3, 4 touches on the top, and you now have 3 touches on the bottom. This is a valid descending triangle, all right, which do play down to the downside, all right. So you don't have a ton of room to get any like fake out pumps up. So you could pump up, you know, as high as 20,500. You could even pump up and try to tap your 55 EMA on the daily. That's this blue line right here. All right, and maybe get rejected from it and then come back down. All right. So just be weary of that. All right, your 55. I mean, your EMAs on your weekly time frame are all just pointed down. They started to tighten up here, right? Starting to, you know, the EMA started to curve up. You know, held it as support on the weekly here. This green one is which EMA? I always forget the. That is my EMA 5. You know, it's nothing crazy. All right. So, you know, be wary, be cautious. All right. So, that is Market Cipher A. So you, on the weekly. All right. Also, your stochastics on the weekly, although turned up, could easily cross and head back down for more downside. All right. The fact that the stochastics are up, BBWP, all right, measuring volatility, is at the bottom, turned up, ready for a move. All right, a big move. All right. Usually when these are down, you do get a significantly big move. So let's just take it back in time. All right. So when the weekly BBWP was to the downside here, you got this big move to the downside. What was that move? That move was approximately 50%. Okay? It's a big move, right? On the other hand, you could argue that when BBWP was bottomed out here, or even here, right, you got a 400% move, 400 to 500% move to the upside. So you got to think about it in context. You know, what's more likely in this environment, and what's going on? Are you going to get a 400% move to the upside, you know, or just a 50% move to the downside when everyone is calling for 10K? Plus, you got yellow X's popping up on Market Cipher. You got red dots popping up, and we'll take a quick look at money flow real quick in previous bear markets. So this is our main chart here, all right, the LX, and we have spider lines drawn out from the previous bear market, not the last one, but the one before that. And this green line did hold as support throughout the entire 2018-19 bear market and the Black Swan event. All right, and that target is coming in at around $7,000, right? But there is a lot of lines of support here from previous bear markets, from the previous 2014 bear market, you know, that will act as support. So I don't think it's going to be a straight shot down, although there's not much on your VPVR here, right? So that's something else to think about, all right? I mean, capitulation candles do tend to move pretty quickly, all right? We have this drawn in here from a while back. Let's take a look at money flow, previous bear markets. As you can see, money flow did come down. I mean, in 2014 or whatever, you know, negative 29. And then the 2018 came down to negative 36. We've only come to negative 16 on money flow. So you would think that money would start flowing out. And if you look, money flow is turned down on the weekly, looking like it wants to make a lower low here, a lower low on money flow. VWAP is also pointed down. All right. things are really, really low on these longer time frames. So it's likely you get a pretty good bounce. All right, from where we're at. Okay. Okay. So that is the weekly. All right. Let's pop into the 5-day or the 6-day. Yeah, 6-day. All right. You're getting another yellow X here. All right. On this 6-day candle, confirms in 2 days. All right. That will not be good. All right. Again, Stokes are at the top. Not great. Red dot. And BBWP is starting to expand on the 6-day. On the 5-day, yellow X, red dot, BBWP expanding. All right. And the RSI does have plenty of room to run down. You know, it's at a 36. We got down to a 26 on the last capitulation candle. All right. There are arguments here. Let's look for some bullish div here. All right. So let's just take our look on the 6-day. All right. So here you got uptrend of support on your RSI. RSI is gaining strength. All right. Interestingly enough, where price action actually made a lower low from there. All right. So you got some bull div on your 6-day. All right. Now, if this comes down, right, you have to watch the RSI, because if this comes down, you can make some exaggerated divergence, or if it makes that lower low, the whole thing is null and void and doesn't even matter, right? So let's go to our 4-day. All right. Not much happening on the 4-day, but let's just take a look at money flow. VWAP is pointed down, money flow kind of curving over, right? Momentum wave kind of coming down. All right. Also, like, you know, Market Cipher has these green dots, and people, you know, snake eyes on the 4-day. Of course, you got a little pump up. I mean, it did give you a little bit from the bottom, right? You mean 30%, 40%, you know, from those snake eyes on the 4-day. That's pretty much what it says. But, you know, they mark a bottom, but not the bottom. All right. So let's pop over to our 3-day. Again, are you making some bull div here? No. Actually, you did make some bullish divergence on your 3-day on Market Cipher. Now that I'm looking, I don't know if it's confirmed yet. Let's see. No, you didn't really confirm it yet. Right? It's still looking kind of like hot garbage. All right. On your 2-day. All right. 2-day, not looking great. Is this a new 2-day candle? Yes, we have a new 2-day candle starting off red. All right. Daily BBWP has expanded. All right, so I do expect some sideways action for the most part. All right. You know, one thing that's funny is everyone thought we were going down to 10K just yesterday, and you got a bullish hammer. I mean, what a great way for the market makers to paint a bullish, you know, picture, get everyone to buy in here. But one thing is, if you look on your VPVR, I mean, look at this huge high volume node. I mean, you got to get back above that. You get back above that, you could have clear skies to the 55 EMA on the daily. All right. But you didn't. You were not able to close above that. All right. And it looks like you're just going to dribble down. All right. Now, anything can happen. I mean, so today is Tuesday. All right. I don't think there's much news coming out today. There's some, but tomorrow is the day. All right. You have your FOMC meeting at 2 p.m. All right. With the statement and the press conference and all that other stuff. All right. So, you know, it's a long way away. Let's see what the countdown is on that FOMC meeting countdown. All right. Let's see. Is this the countdown? So you got about 20, is that 20, like 30 hours, right? About 30 hours till that goes down. So a little bit more than a day. All right. So 30 hours. All right. A lot can happen in 30 hours, but more than likely you're going to bounce around in here sideways. right? You get a closure back above this. You get a little pump up back above this. Watch out for a fake out. Of course, you have an imbalance in the chart. This right here is a high vector candle, all right, that they may want to come back up and take, all right? There was a big sell here, all right? It's a big imbalance in the chart. You know, they might be looking to pump things up a little bit here. And maybe they'll use the FOMC meeting as an excuse to do that. You know, let's say you get 75 basis points. Everyone thinks it's all good. You pump up and then just roll over, right? Because you would make a little bit more room. Daily Stoch's not looking terrible at the moment. Yeah, they're pointed down, but, you know, how much more... They could come down and just run. So, I mean, you've seen that before. I mean, they've come down here, right? You're about there on your Daily Stochs from the last time you were at this level, right? Right here. Right about here, right? So, and then you ran down, you know, 13%. But I mean, once you get down here, you know, there's not much. I mean, maybe you come down to 14K, you know, is that 13%? Let's see. Yeah, you know, something like that. You know, it's not going to be going down to these levels. It's not going to be straight. I mean, that can what a lot of that tells me is the BLX chart, because I mean, just on my spider lines, I have a lot of lines here going down to 10K, 7K, right? So there's a lot of support down here, a lot, and that's a lot of buyers. There's going to be a lot of buying interest here, all right? So to get down there, it is going to be tough, you know, if you're looking to buy the bottom. That's why I would not be trying to buy the bottom. I would be DCAing this whole way down, you know, because you don't know where the bottom is, all right? You're not going to catch it. Very unlikely. All right, so let's pop into our 22-hour. 22-hour does show some promise here. It does show a little bit of promise. All right, so, you know, looking at our indicators, BBWP is down at the moment. All right, could expand a little bit. The last time it was down at this level, we did get this little pump up here. All right. But also when it was down at this level over here, right, you did get this drop. So, you know, just something else to think about. You are currently in a downtrend, right? So, what else is good here? Let's go to the 12-hour. 12-hour, Stochs are turning up, right? And you have a green dot on Market Cipher. Okay? Money flow looking pretty promising. Here's where trading gets a little bit tough, you know. Right here, you are printing some bull div on your 12-hour. All right, where you got swing down to swing up here. All right, that is bullish divergence on your 12-hour. All right, now could that be played out? You know, you got that little pump there. I mean, that was no little pump, all right? I mean, a little pump. But, I mean, you're talking about 8%. That's, you know, that could be your bull div on your 12-hour. Let's go into the 8-hour. 8-hour, let's check money flow. 8-hour, yeah, 8-hour doesn't look great. Money flow still in the red, VWAP pointed down, right? You could make another momentum wave down there. All right, let's go to the 4-hour. Here's where things start getting like you know, you wouldn't know what to do. 4-hour though, 4-hour, you didn't really leave this vector candle down here, right? There is some, but you know, you did kind of take that wick on your 4-hour. So we'll see where the vectors came in. Yeah, so you can see most of the selling, most of the longs were up in here. All right, so it does look like the volume has been taken. Okay, this is your 1-hour, by the way. All right, 1-hour, you know, momentum wave. It's a large momentum wave. It looks like you want to come down a little bit here. All right, so maybe you're gonna come down, and let's just project a little bit of fake, you know, here's your W formation, hit to the downside, hit to the upside. You can come down, maybe test this trend line, maybe get another fake out below, and then one last rejection from there and come back down. Or you pump up to the upside. You know, I don't know. I'm not here to tell you what the price is going to do. I'm just going to show you what the indicators are and what they're saying. And then, of course, let's just go to the 15-minute because it's fun. 15-minute. 15-minute bull div. Interesting. You got some bull div here. Confirmed. Right there. Alright. So, you know, one thing I'm looking at is are these bull divs playing out? I mean, they look real weak. I mean, they look real weak. Alright, let's just go over to the daily again because we want to watch our RSI. RSI is very important. Alright. RSI on the daily. Alright. This top trend line has been a problem for us. Alright. Boom. Rejected. And you got multiple touches there. Alright. But what you don't have, really, is another touch on the downside. So, you know, the TA perspective, you'd be looking for another touch to this. Right? And that could touch and break. Right? Maybe get down to the low on the daily. I mean, look at how low things have gotten. Right? I mean, this is November 2018, right? There's your capitulation, all right? So you can go as low as 10, you know, as low as 15, right? You see the RSI on the daily getting that low, you better buy something because you're going to get a bounce. This is a huge bounce. That's a good bounce, all right? Don't expect price to stay down there for too long, all right? But at least come back down and tap this trend line, all right? And then, of course, like, you could just be slow bleeding for the next 4 weeks, you know, where the RSI comes back down, you know, makes a lower low. It could tap the trend line. You either break it and capitulate, could be, but I kind of don't think that's going to happen. And you come back, bounce back up. You know, make more room for more downside. You know, if you're at $15,000, right, when you're or you know, 14K here, and it wants to go to 10, it'll bounce up, make a lower high, and then come back down to 10K, and now you're bottoming out there. You know, it's just where it's going to be. You know, rather than one big capitulation candle, that's what everyone's expecting, right? One big candle to the downside, one last flush out or whatever. But really, you know, when I look at this chart right here on the weekly, I don't see that. I don't see a huge capitulation candle. I mean, VPVR does say that from over here. They say there isn't much, but what they aren't accounting for is the spider lines from the previous bear market. So I don't see, you know, an easy way down here. I mean, there's going to be a lot of buyers. I think there's going to be a lot of buyers, but a lot of pressure coming from the stock market. All right. So the stock market, let's go to the Dow Jones. Dow Jones looking like hot garbage on the weekly. That's one of the things, all right? You got a red blood diamond here, right? The last one brought you down, you know, 20%, 17%, right, from that blood diamond. So this blood diamond here brings you down another 17%. You hit the bottom of the channel. All right, the Dow comes down 17%. What's Bitcoin gonna do? You know what I mean? Like the Dow. Let's see. Let's just look at the. All right, so like last week, right here, the Dow was down 4% last week. Bitcoin. Was Bitcoin down? Bitcoin was down 14%. All right, so It's like 3 times. It's like 3x, So 17, yeah, it's not good. It's not good. So things are not looking good. In general, everything kind of looks like garbage. All right, the DXY. The DXY on the weekly looks fine. I don't see anything going on the DXY here. Volatility is a little bit toppy, but it's running. All right. Everything looks like it's just running. It just looks like it's having a good time going up. And a lot of people talk about bearish divergence on the DXY. All right. So you got, for example, higher highs in your price action here. Okay. And then you got lower highs in your price action here. Right. That's bearish divergence. But I mean, if you go back and you look on a weekly time frame, I mean, take a look at this run up here. All right, and here's a smaller run up. All right, you printed some bear div here. All right, higher highs, lower highs, and you did get a little drop off. Here's where we're at now. Right, this white line. All right, you printed bear div that whole run up. I mean, that's 3 drives right there. 3 more drives. So you printed bear div again and again and again. And over here in this massive run up, which is scary to think about. Okay? I mean, you printed bear div the entire way. Okay? So there's some bear div all the way to there. Right? You printed bear div all the way to there and it didn't even flinch. All right? It didn't even flinch and it just went parabolic, right? Until it finally like double topped here on the RSI, I guess. All right? I mean, and then even looking at Market Cipher, and let's look at it on like a monthly time frame. Expand this out a little bit. All right, it's been a little choppy in this run up for the DXY, right? But it looks a little bit different. But look at money flow. I mean, money was coming into the DXY here, right? I mean, it looks like, and look at here, you just had a little bit of money coming in, drop off, and then more money, on that next run up. And this is 2015, you know what I mean? So let's just come over here. Here's your dip down. It's just getting started. Money flow is just getting started in 2021, in this bear market. In a bear market, when things were, printed to all hell and things are going bad, you're just getting started on your money flow. So if you get something like this over here, comparable to this, this is a large run up in the DXY. A very large run up. All right. And it fell out of a falling wedge. Target is 176. All right. But you are in, a rising channel. All right. And you are coming up to the top of that channel. A lot it can be said about the top of this channel. All right. I mean, the next touch could bring you back down to the bottom of the channel. All right. Or think like Black Swan-ish, you just bust out of that, I mean, this is a monthly time frame. Let's look at BBWP, see what's going on. So BBWP, all right, back in here, yeah, things look a little bit different. Never really bottomed, it's always running up on BBWP. So let's just go over here. All right, BBWP, we expanded out. We reached the top. I don't think you can use BBWP on the DXY. Probably not. But look on the monthly RSI. All right, in this run up here, I mean, if you're gonna use RSI at all, I don't know that you can, right? You know, here's your monthly. You ran up, right? That's comparable to this. Okay, and then you just ran on your monthly. You ran sideways by making and just went straight up. All right, is it likely that it just runs sideways here, and we just keep going? That's a very good possibility, and if that happens, it's not going to be very good at all. Okay. What was other things? So, you know, it's looking like 2008. All right. A lot like 2008. At the current moment. This is on a monthly. Let's go to the weekly. All right, where were we at? Where do we think we're at? All right, on your wave counts here, right? My wave counts don't look like they're right at all on this. 1, 2, 3, 4, 5 down. All right. Yeah, this would be one wave. Actually, this would be a wave. Nonetheless, you got a blue triangle here on your weekly on the SPX, right? You know, a bear market rally, all right? And then you came down, you tapped, you came back up. I mean, this would be where everyone thinks it's the bottom is in, right? 3 taps on the bottom, 3 waves down, you come up, and then bam, just freaking big capitulation. Now, none. It's not to say that that's going to happen here, all right? You know, but you know, again, you got a red blood diamond on your S&P 500, all right? And you are looking for that 5th wave down. It's either going to stop here at the golden pocket, all right, and that's the end of your bear market somewhere this fall, right? Or we're going to maybe get a little fake out. You know, everyone thinks it's all good, baby. You get rejected from one of these fib lines and see ya. You know? Somewhere in, you know, February or whatever. I don't know. I could have sworn I had something else on here that I wanted to show you guys. My stomach growling. I think that's basically it. I think there's one more thing I want to talk about, but I want to talk about Atom. Let's see. I have the days counted out from our last wave. So, if this is even right, this doesn't even feel like it's right anymore. I feel like it got messed up. My wave counts don't make any sense. What is this? Alright, hold on. Alright, so here. Whoa. Don't be late for work. I don't want to go to work today. I've got to get paid. Teachers don't make any money, guys. Don't become a teacher. Watch out if you're a trader. Alright, so 1, 2, 3, 4, 5. This count is wrong. This count is definitely wrong. Let's redo that count. And here's how I do my counts. I mean, I'm really bad at counting. You know, I'm not an Elliott wave person, but waves, you know, things do come in those 5 waves. You know, three hits to the downside. All right, I do believe in that. All right, so let's just count these waves here. All right, so this would be like 1 wave here. 1, 3, 4, and then the 5th wave brought you way down. All right, that's more like the count. So like right now we're on our 4th count here. All right, and then to the bottom, right? It's either going to stop here, right, and hold that as support, and we can just say, okay, we dribble up and bounce from there. There's going to be a lot of people longing that. All right, right here, just like this. All right, This is something to be cautious about. But here's where you need to be DCAing. I mean, you have to. You have to, and you can't care. All right? Is when it does come to this point here. All right? You're going to have to make sure that you're in the market. You have to. Right? Because that could be the final wave. Right? There's no guarantees of a capitulation. All right? We don't know that. We know they're going to continue to raise rates. Right? One thing is that, they're probably about halfway done with raising rates. They're going to stop next year. So, the one thing is the timeline here. How long it took to bottom. That's what I really wanted to look at from the blue triangle. You went down 50% in about 1 year. All right? That would be all of 2023. All right? Otherwise, 2023 is going to be bullish, and I don't know that that's going to happen. All right? So, right here, everyone's expecting the bottom, fall. All of this to be the bottom. That's what people are expecting. I expect that too. I think that is a good spot to pick too. Not go all in, obviously, but do you go 50% in? For sure. If you had 50% of your money, go in 50% there. And then once you start seeing, it moving up, maybe go 50% in here. 50% in here, 50% in on a break of this, or a back test of that 0.382 fib. All right? That wouldn't be a bad move. Right? On your weekly, you got a nice trigger wave, momentum comes down, you put in some bull div here. That could be the bottom. 2 green dots, no problem. All right? Oh my God, look at the 10-year yields. 10-year yields is breaking out. I mean, shit. That's not good. I mean, that's a breakout. It means people want to put their money in bonds. You're making a higher high. You're holding it as support now. This is on your monthly. It looks like it's ready to just run. It looks like it wants to just run. That looks terrible. Well, it looks great for bonds. It looks terrible in the market. One red dot, I mean, if it's followed by a green dot, that's not good. What's it look like on the weekly? Momentum building. You get a higher high in your money flow, and you're at the top. This is a big thing. It's scary. It's really scary. Alright. So Bitcoin, for the most part, sideways today. Well, yeah, Atom. So Atom, we did very well on Atom. We didn't put a ton of money in. Of course not. Wish I put in more money. We put in money at $7. Alright, so we doubled our money here. Alright, hoorah. You're getting the big resistance here. But on September 28th, alright, Atom 2.0. Let's see. It says it. Alright, in this article. They think it's going to go 160x. Who knows? Alright, but Atom 2.0, where are you? Here. On September 28th. Alright, we all know what happened with Ethereum 2.0. Alright, sell the news. Boom. Done. Okay? So just be wary of that. Alright? You buy the rumor, sell the news. But Atom, if you look on your weekly, I mean, you could run up to $18 here. Alright, but with the way Bitcoin is looking, and look at your Stokes, okay? Let's look at regular candles on the weekly. Let's see if we got any bear div popping up. I mean, from this weekly candle, let's go back from here maybe on the weekly. There's a lower high. You got some bear div on your weekly, I think. Alright, so you do got some bearish divergence on your weekly, alright? That's always a good sign to take some profits. Alright? Like, yeah, bear div. Alright, so just be wary of that. You have 2 drives of it already. Alright, so be cautious with that. I wouldn't buy anything that has bear divergence on the weekly. Alright, anyway, that is the video. I don't think I have anything else to talk about. Let's see what happens in the upcoming days. It should be very, very, very interesting to see what's going on. You know, watch out for the scam pumps. Watch out. I mean, they want people to buy in so they can sell on you. So watch out for that. You know, maybe today they think, you know, everyone wants to go short. We get a bounce up. We're just gonna go sideways until the meeting. It's very likely, and then after the meeting, you know, we'll get a clear direction in the market, you know, which is probably going to be a fake out to start off with, right? I mean, look at 2-day BBWP. It's at the bottom, all right, and this will close in 2 days, all right. So the move is probably going to come after the meeting, all right. So just be cautious. And I have no idea, you know, I have no idea what's going to happen. But, you know, if this, I mean, you still have 2-day vectors all up in here. I mean, there's still tons and tons of vector candles. But they didn't come back for these vector candles here. Oh, and then where's the bottom, all right? I mean, look, we got these levels marked out in our charts, right? Basically from vector candles from 2 years ago, all right? There were vectors down here, vectors all in this region, all right? So any one of these points could be the bottom, all right? And if you're looking, you know, as far as like trend lines go, you got this trend line here, a lot of confluence at 10K and 7 and 8K, all right? There's a lot of confluence there, you know? And look at where you are here, you know? It's not going to go straight down, okay? But, you know, boom. I mean, scheiße. You'd almost want it to go straight down, you know, because you want another touch on the line. You could bounce from anywhere, but, you know, something like this, you know, get a bounce. This looks scary when you draw it out. Something like that. Maybe you break out. You know, who knows? All I know is that the bottom is close. That if you're not dollar cost averaging into assets at this point, you're doing something wrong. So make sure that you are buying a little bit each paycheck for the next 1 to 2 years. I think that's a good investment at this point in time. Things are down. You know, all in this region, and then don't be afraid to dollar cost when you come back up to here. You know, and you just gotta know when to stop. You know, dollar cost averaging. You know, wait for, you know, when things get a little bit high, you can stop. You know, wait for them to come back down over the next year. I mean, what do I have this marked out here, right? Something like this, right? You know, maybe you dollar cost average for the next, you know, 6 months, you know, then maybe you want to stop, see where the market goes, see if you can, you know, see if you can break back above. This is going to be major resistance here. I mean, you spent a long time in here, you know, really long time, you know, 100 days, all right, of people, you know, this is where the major resistance is. It's 30K. You know, I think that's where you can stop dollar cost averaging. That's where you can just call it quits. There's no point, because you know, you don't know if this is going to go back to all-time highs or whatever. And then the risk to reward ratio is not great there either. Anyway, that's the video. I've been on here for 45 minutes. I want to relax before work. I'll see you guys in the next one. Peace out.